So alternative investments are exactly what they sound like. They're alternatives to traditional investments. Now, when I was in school, I was told that your money should be in equities, stocks, fixed income, bonds, or money markets, basically in the bank. Now, we have this whole other class that diversifies you away from these traditional asset classes, and that's called alternative investments. Now, in these alternative investments, we have private equity and venture capital. Now, are those two things different? We'll find out in the next video. Infrastructure, which could be highways, airports, utilities, real estate, retail, office, residential. We have timberland. We have managed futures. We have credit instruments. And you know what? We can even include hedge funds. Now, most people do include hedge funds. Nowadays, looking at how hedge funds are somewhat correlated to the market and seeing their returns, I'm not really sure they should be in this asset class, but most people say hedge funds are alternatives, so let's leave it in. More and more investors have been increasing their allocation to alternative investments. Why, you ask? Well, alternatives will give you increased diversification and an enhanced return. Let me give you an example of investors that have a decent portion of their allocation in alternatives. The top 10 pensions in Canada have a 32% allocation to alternatives. Now, these top 10 pensions in Canada have $1 trillion in assets. Yes, that's trillion with the T, which would mean their alternative asset allocation is over $320 billion. And remember, this isn't the top 10 pensions in the world. It's the top 10 pensions in Canada.